Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Bumble. What I like about Bumble in terms of its profitability, what I kind of don't really like about it is its growth rates, and then we're going to talk about its valuation. So I'm just going to jump right in. So one of the things that puts me off here is that the company is growing a kind of a bumpy rate, and it's quite difficult for me to kind of realistically come to terms with what its growth rate is going to be. On a positive side, we can see that for the first half of 21, its growth rates have been quite stronger, approximately 40%. Keep in mind that there's the COVID backdrop, so as the economy reopens, there's the idea at least that this should really accelerate further. Now, I'm not really sure if that's a play. I think the COVID is going to be around for some time, and I think we already are kind of in a new normal. So it's difficult to really say that this is going to be a high growth online dating company. So that's one of the things that I'm kind of really, I'm trying to kind of get my heads around, because I really want to be positioning myself in a company that has, very stable and predictable growth rates, because then, at least I get some kind of margin of safety. Having said that, you can see that since the results have come out, Bumble's share price is up more than 20% in the last month. So investors, took the results on board, and they kind of said, okay, yeah, that's fair enough, and we're reasonably content that the results look satisfactory. And part of the reason for that is that its EBITDA margins are coming in at approximately 27% for the last quarter, but looking ahead for the quarter ahead, it's coming in at approximately 25%. So investors are kind of saying, okay, yeah, it's not growing that strongly, but it's very, very profitable on the EBITDA line. On the other hand, if you take out all those kind of pesky costs and you look at just the net gap, it's in the quarter just went, it was actually negative 11 million versus negative 5 million in the previous year. So, once all is actually put in, it's not very profitable. So, it's kind of like it's a lot of stock-based compensation, depreciation getting thrown in there. Anyway, investors right now, they're kind of looking beyond that, and they're just thinking to themselves, this is still a young company, and it's clearly growing, because the user growth was up 20%. So clearly users are resonating with the platform, despite users having plenty of other alternatives that are often free. So that I just wanted to kind of put out there. Already talked about its EBITDA margins. So here's one of the probably the best things to think about is the stock is priced at 7 times next year's sales. So this is a really a reasonable valuation. On the other hand, if you compare it with Match, so Match is priced at approximately 12 times next year's sales. However, keep in mind that Match is much more diversified, Match is bigger, and Match has a long history of innovation, coming out with the likes of Hinge, which is kind of like a competitor to Bumble. So you would expect a bigger company in this case that investors are quite confident that it will do quite well to be priced slightly more expensive. So in that mind, this is kind of the price target for like the valuation for the group as a whole. And keep in mind that if in the event that Bumble is able to show to investors, okay, we can actually grow stably at approximately 25, even maybe closer to 30% CAGR, investors are going to say, okay, paying 7 times is really cheap. So it's really a question of, can they grow stably at mid-20 compounded annual growth rate? So if they can, paying just 7 times is very cheap, because 7 times forward sales is less than half the growth rate that investors are paying for. So with that in mind, I already touched about the fact that there is some competitors. I already touched on Match. Obviously, there's plenty of fish. There are other options as well out there for consumers, so for users. So it's not only Bumble. There are other players as well in this space. So the multiple that investors are paying for is very much relative to that uncertainty. If investors get quite confident that the company has got what it takes to grow at the mid-20s CAGR, I think that investors will be quite willing to pay at least 10, 11 times forward sales for Bumble, which they're not really doing right now. In any case, so I think that there are better investments out there, to be honest. If you want to find out what kind of stocks I'm looking at right now, don't forget to check out our marketplace. It's called Deep Value Returns. and you're welcome to do a totally free trial to see if it suits you, and you can cancel anytime before 14 days, so you're not going to get charged anything at all. Come in, chat with our growing investment community of value investors with like-minded individuals looking for great ideas. And I'm not going to replace you as an investor. I'm just going to be a place for you to kind of source 1 or 2 ideas a month. So with that in mind, I hope to see you next time. See you soon. Bye bye.